Welcome back, and well, look who's back on the news. Gary Gensler talking about Bitcoin maximalism. No regrets, as his legacy in the SEC chair is now over. And what is going on in the crypto space is basically even the people on like the reporters who are asking him questions even admitted that the whole industry is thriving now that the SEC is under other administration. But guys, there is a lot going on in the crypto markets, and we need to discuss this. We just heard from the Federal Reserve in September that they're cutting rates by 1/4 percentage point, which has been priced in. But there is a lot of red flags in the traditional economy. There's a lot of red flags with businesses. And remember, the interest rate cuts does not indicate money printing, and money printing is really what drives the crypto markets. But why are we then seeing some cryptos reaching all new record highs or touching those new record highs and basically pumping across the board? Well, in today's video, we're going to be discussing all of this, and this might change everything. Is your portfolio ready? And by the way, Ansem, the Solana meme coin bull, has also called the top. So make sure you guys are subscribed to this channel. Also give the video a free thumbs up. Thumbs up are free. Crypto is not. We upload every single day to bring you the latest happening in the financial world. And again, I'm just providing you my analysis and opinion on where the market is and what is going on in the market. And hopefully you can use that in whatever way you want to prepare your portfolio. And listen, I may be wrong, I may be right, but we are looking for the indicators in the market. And now we are 18 months since the Bitcoin halving in 2024. And this historically is when the top of the market is reached. But there's a lot of people who are the most bullish they've ever been at this point, which could indicate that we are at the top. Meanwhile, let's understand what this investor says. Almost 19,000 followers. Investor relations at Orange Group Advisors, obviously a Bitcoin maximalist. And he wrote a very important tweet that I think that I've been kind of talking about for years on this channel, and it's about taking profits, right? Remember what you're investing for. Investing is not maximalism. Investing is not to hold forever, right? Investing is to increase your wealth, increase your standard of living, increase your chances of having a good retirement, increase your chances of traveling or buying a home or buying a car, whatever you want to do with that money. Let's get into it. So this investor relation guy said, when your portfolio is hitting all-time highs, the instinct is to celebrate. But the truth is, if you want to last as an investor, you need to train yourself to feel nothing. Remember, emotionless investing. You can be excited. Guys, I'm excited about crypto. I'm so bullish on Bitcoin specifically, and pretty much the rest of the crypto sector. But that doesn't mean that I'm going to hold the asset forever, right? It's the same thing like with a stock. Like you can love Coca-Cola, for instance, like Warren Buffett loves Coca-Cola. He holds the stock. But just because you love Coca-Cola doesn't mean you have to hold the stock. Just the same way if you love Bitcoin, doesn't mean you need to hold it. There's right times to hold it, buy low, and right times to not hold it, sell high. Danny in his tweet continues saying, a thesis playing out exactly as you expected is simply the process working. The discipline is to be content, not enamored. Well. One example, just as of recently, is Bitfarms. Bitfarms, I've been talking about literally for years at this point on the channel. And it went down to about 68 cents back in April. You can see on the screen right here. And also hit about 70 cents back in June. And what I've been talking about is this stock is highly undervalued because of their AI capabilities. We're also seeing the same thing happening with Iris Energy, and also Cypher Mining that have made huge pivots towards AI and artificial intelligence infrastructure instead of only focusing on Bitcoin infrastructure. Because again, when we are in a bear market, and we will have one, 100%, these Bitcoin mining companies, if that's their only line of business, don't do well at all. And we saw that during the previous cycle as a lot of them went bankrupt. And so you have to kind of look at the market and remove the emotion, right? If you bought at, Cypher Mining here at $2 and now you're at $12, that's a 6x. This is very, very rare to see any portfolio holding increasing that much. And people in the crypto world, they think that every crypto, every stock, everything that they buy has to go up by hundreds and hundreds of percentage points on a regular basis. And that's just, these kind of pumps are the pumps to take the liquidity out. And how do I know that this is what the big money does? Well, Bitcoin. What has been going on, right? Everyone's like, oh, but BlackRock's buying, MicroStrategy's buying. Yeah, but that means somebody is selling their Bitcoin. They're taking the liquidity. And we know that this is happening because we see it happening with Ethereum. We see very early holders of Ethereum that haven't touched their coins since they started staking, exiting the staking queue. 2.4 million Ethereum are in a around a 40-day hold to get their coins out. And why are so many people trying to get their coins out of Ethereum staking? Because they want to sell it, because somebody's buying it. And they know that that bid is not necessarily going to last forever, especially with what is happening with the general economy. We're going to get to that in just a minute here, but let's get back to this tweet. So Danny continues saying, the moment you get emotionally attached to your positions is the moment you start making poor decisions. Patience, and then process, and then risk management, and then do nothing most of the time except wait, right? You buy and hold, the price goes up, then you sell. And it doesn't necessarily mean you sell everything automatically. It just means you start dollar cost averaging out, just the way you would dollar cost average in towards the bottom. Recognize the win, then go back to being dispassionate. That is, if you want to make it in this game and have compounding returns. And I completely agree. I completely agree. We are looking on mostly on this channel, right? But besides the technicals and the moves in these prices of these assets, we're looking at the sentiment of the market, right? Everybody's so bullish about MicroStrategy, but then we start to see cracks in that conversation. We start to see people sell, and then we see the maximalists get angry at the people who are selling. How dare you sell your coins? You misled us. It's like, no. Like last year, this was a good trade. This year, it's starting not to be a good trade for many different reasons, right? And when you put all that together, it's no longer a good investment for my portfolio. You're getting mad at me for what I'm doing in my portfolio. That's like you getting mad at me for what I'm eating for dinner because you don't like what I'm eating, so I shouldn't be able to eat it. It's like what one has nothing to do with the other, right? You just don't eat whatever I'm eating if you don't want to eat it. But don't get mad at me for eating it. Same thing here. And by the way, you don't see this in a bear market. You don't see people saying, how dare you buy Bitcoin at these prices? How dare you do that? We are at the bottom of the market. We still have more down to go. You don't see that. You only see it on the way up because they know that, or let me rephrase it. They start to question their own thesis on where the market is. And it goes against their, oh, well, I bought it 100,000. I mean, we're seeing this with the Bitcoin treasury companies, right? Most of these Bitcoin treasury companies that popped up in the last year or so, they're literally buying at the prices that we're at today. They're buying at over $100,000. So if it goes under $100,000, what is the company going to do? We don't know the answer to this question. We're going to be getting a little bit more into that in just a minute. But let's continue with Chris Bernisk, who's a well-known crypto advocate, partner at Placeholder Venture Capital. He said, if I had to guess, we are a couple more quarters of bullish expansion. Then everyone can be bearish again. Remember to sell some when you're all bulled up. Probably won't warn again because no one wants to entertain caution when they're drunk on paper profits. I would agree. I would say like being not so bullish like we are on this channel at this point in the cycle, it's like going into a bar and not drinking, right? Everyone's like, why are you here if you're not drinking, right? It's like you can't have a good time without drinking. And that's the same situation we're in, right? Even Chris, who thinks that we still have more to go in the bullish sentiment, he's saying take profits. But a lot of people won't. And that's okay. Because that's not my portfolio, and that's probably not your portfolio. And it doesn't matter what anybody else is doing. If they're going to win or lose, it doesn't matter. Never compare your portfolio to somebody else's portfolio. Because at the end of the day, it doesn't matter. The only thing that matters is your portfolio. The only thing that matters is that your portfolio is printing, not what anybody else's is doing. And that brings us to Ansem. So this user, Maine, founder of Breakout Prop, which is, I guess, a prop trading platform, would not necessarily recommend. But anyway, he posted this chart saying Bitcoin. And this is from June until basically end of September. And you can see a top and then another top and then a little bit of a correction. But what are we seeing here? We're seeing lower highs and also lower lows. And on the high situation, it's we can't really tell just yet. But this is not necessarily the chart that I wanted to show you. It's just part of the tweet thread. Ansem responded, and you guys know Ansem, well-known Solana advocate, and I think he's very big in like meme coins and stuff like that. He wrote, last chance to sell Bitcoin above $115,000 in 2025, effectively indicating that he believes Bitcoin is topping out, which is very in line with what we've been talking about effectively since the June timeframe. I told my viewers, like after June and July, everything else was just volatility. And you don't want to be trading, or I should say holding through a volatile market. You can trade through it because that's when there can be money made, but you're going to see massive run-ups to the upside and also massive run-ups to the downside. I mean, just look at the 7-day, this is the 7-day column on CoinMarketCap. You can see some are higher, some are lower, right? You have Avalanche up 20% on the 7-day, and then you have Athena down 10% on the 7-day. You have Near Protocol up 16% on the 7-day, and you have Ondo down 5% on the 7-day. So there's like a lot of like mismatching going on, and this usually says that this is the rotation phase into either the bull market, the bear market, or sideways trading. But we need to really understand what's going on in the general economy, because this is the indicator in my view, right? You can be so bullish on crypto, that's fine. You could be bullish on the rate cuts, that's fine. But rate cuts indicate economy not doing so well. And we know this. And it seems to be getting and people are ignoring this. They're saying it doesn't matter. If the economy is worse, Bitcoin goes higher. It's bullish for Bitcoin. If the economy is better, it's bullish for everything's bullish for Bitcoin. The same way that the MicroStrategy crew, everything is bullish, right? Michael Saylor sells at above at 1 MNAV, it's bullish. He doesn't sell, it's also bullish. If he buys, it's bullish. If he doesn't buy, it's also bullish. If the price of MicroStrategy goes down, it's bullish. But if it goes up, it's also bullish. Everything is bullish. That is not investing at all. And so Amanda Goodall, who's the job chick on X, a corporate recruiter, kind of very in line with what's going on in the corporate world with these companies hiring and not hiring, she said the economy is breaking and nobody is ready. Nearly 2 million Americans have been unemployed for over 6 months. And remember, when you're unemployed for over 6 months, you no longer count in the unemployment numbers. And I'm about to show you that as well. We're getting to the Gary Gensler stuff and some other indicators that are happening in crypto, like Coinbase launching their own token, like yield generating products promising 10%. A lot of same indicators that we had in the previous cycle, but we're going to get to that in just a minute. She also says average severance, meaning when they lay off employees, they give them usually like a few weeks or a few months of pay. She said it's still under 8 weeks before taxes. So think about that. You get laid off from a job. They give you 2 months of pay, but most people are out of job for 6 months. And I'm seeing people applying to jobs, thousands and thousands of jobs, and not even getting a call back. Very similar to what happened in 2019 and early 2020, right before they shut down the global economy. She said credit card debt has now hit $1.2 trillion in August. This is a new record high for credit card debt. And over 6.1 million consumers had student loan delinquencies reported this spring. If unemployed, you're staring down a 6-month job search with just maybe 5 weeks of cash after taxes. Fall 90 days behind, collections, lower credit scores, wage garnishments. And now even Jerome Powell admits, I can no longer say the labor market is very solid. And he said that in his September rate cut conversation. So it's not just Amanda saying this or me saying this. It's Jerome Powell saying this. Now, Amanda had another tweet that said 60% of companies are planning layoffs in 2026, and the purge has already started in 2025. 41% pulled back on hiring. 1 in 10 froze hiring completely. 39% of companies have already conducted layoffs. 1 in 3 say more cuts are coming before December. And 4 in 10 companies say they will replace jobs with AI by 2026. And so all of this is culminating, right? And people are ignoring it. because they're drunk, right? They're drunk. There may be floods outside or hail outside, but they're in the bar drinking and having a great time. They don't care what's going on outside. They may not be able to get home, but they're going to be fine because they're in the bar drinking right now. This is how the market is. This is the euphoric part of the market where people are now bullish. They're buying. They didn't buy the lows a few months ago. They're buying now. And they're providing more exit liquidity for people who want to get out. And that is exactly what is going on in my view. And I have some more videos and evidence to prove this once we get through this other tweet from Amanda. By the way, today I'm drinking iced coffee. What are you guys drinking? Let me know down below. Give the video a free thumbs up. So Amanda wrote, what I am seeing is consumer credit right now. Bank charge-offs are rampant, seeing $1,500 to $5,000 accounts as CO, usually 2 per report, which is used as one big 20,000, which is, all right, we're going to skip this tweet because I don't understand what she's saying here. I did before I recorded the video and now I have no idea. But this is the tweet I really was interested in. She said, rumor, Comcast layoffs. She just spoke with an insider who got the email from Dave Watson, I guess one of the executives at Comcast. Very paraphrased here. Effective January 2026, Comcast will eliminate the division structure. All regional operations will report directly to a new role, President of Operations, directly reporting to the Chief Operating Officer. The goal is to streamline layers and lengthen the connection between headquarters and local operation. Some roles will continue, particularly those supporting customers and frontline employees. Other responsibilities will be reassigned, implying redundancy or role elimination for many division staff. And so this is what we hear when job cuts are occurring. This is the rumor. Buy the rumor, sell the news. In this case, if you buy the rumor, meaning believe the rumor, you want to sell it. Because this is generally what we're seeing, and people are getting laid off, right? We're seeing a lot of offshoring of jobs. We're seeing a lot of just low-paid jobs coming on the market, and people don't want that. They can't afford it. This is the indicator, guys, and this is from the BLS website, Bureau of Labor Statistics. We are now at 4.3% unemployment. In 2024, in January, about a year and a half ago, we were at 3.7. Now, if we zoom this out, how do we zoom this out? Reset to zoom. You can see that right before the pandemic, right before they shut everything down in February, unemployment was 3.5%. And then it went up to 4.4% in March. And then it went straight up. And a lot of that was because of the economy shutting down. But what if the economy didn't shut down? I mean, unemployment was rising. And now we're at essentially pre-pandemic levels in terms of the height. And again, Jerome Powell warned about this, but people ignored it because the prices are going up. And that's all we care about, prices going up. But once prices go up, they come down, right? It's the same thing like you go on a roller coaster. Everybody loves going down instead of going up. In crypto and stocks, it's the opposite. We like going up, not going down. But it's bound to occur. Meanwhile, Gary Gensler is back on TV. So this was a piece. There was a highly edited one running on social media, but we're going to watch the unedited conversation with Gary Gensler, who, again, doesn't think anything that they did was wrong or couldn't have done anything better. It's truly unbelievable. But yeah, he kind of got wrecked in this interview. Let's listen in to the Gary Gensler interview, end of September of 2025. Don't forget to give this video a free thumbs up. We have a lot more to pay attention to, including Coinbase, including yield-generating products, and more, coming up in just a few minutes here on the channel. Let's listen in.
The crypto community is ecstatic not to have you there anymore, and to have him there right now. What you did around securities and enforcement actions, and looking back on it, I mean, do you think that was the right call?
Yes, I think.
Because look, now we have this like burgeoning industry, and there's so much more innovation and leadership in the U.S.
and a lot more capital coming into it.
Whoa!
There may be more capital in terms of the interest in the public. The public is interested. I get that.
By the way, so is Wall Street. Very clear. Wall Street is interested, but he doesn't want it for whatever reason. Let's continue listening.
But I took an oath of office. I also ran a law enforcement agency. And my predecessor, Jay Clayton, a very fine individual, ran the SEC. He's now the head of a law enforcement agency, again, up here in New York. Yep. Was bringing many cases in this field. Was bringing over his tenure about 80 to 100 cases. Over my tenure, we brought about 100 cases. We were consistently trying to ensure for investor protection. And in the midst of it, we had a lot of fraudsters. Look at Sam Bankman-Fried, and he wasn't alone. And so investor protection. So when I look at the field that trades mostly on momentum, mostly on, frankly, hype for investors.
You think this is dangerous, what they're doing?
I think that for investors, everyday investors, the 5 to 10% of Americans who invest in crypto, and it's hard to get the real, but that it's a highly speculative, very risky asset. And in most of these tokens, put aside Bitcoin, but most of the other tokens are not tied to any fundamentals. And there's 5 or 10,000 of these tokens. So usually over time, you find new equilibriums. Like Warren Buffett would say, what are the goods? What are the revenues? What are they selling? And so forth.
So there you have it. I mean, at the end of the day, it's pretty amazing that there's no reflection on. Granted, yes, there's a lot of scams out there, right? There are in crypto, and there's a lot of coins that went to zero. I mean, FTX, FTT, all of that. They were suing Coinbase and having private meetings with Sam Bankman, and didn't take any action against Sam Bankman or FTX until after it collapsed, and didn't protect a damn person. They didn't protect anybody. You know who protected the customers? Coinbase, Gemini, Binance. They protected the customers, and they ended up getting sued. And we've talked about this, right? I mean, Gemini got all their customers exactly what they had at the date of loss. They got all of it back in kind, in the crypto. Gensler didn't do anything. He didn't do anything to protect anybody, any of us. And that's really a shame, right? And, there's a reason that, in my view, that we have a different SEC administration now, because it was not acceptable. And it's the same thing like when they asked the president, the person who was running against the president, like, would you do anything different than President Biden? She said, no, I wouldn't do anything different. And that's a problem. It's the same thing that Gary's doing. Instead of reflecting and saying, okay, we could have done something different, right? Maybe we shouldn't have had those meetings with Sam Bankman, or taken some more enforcement action, or really protected the American investors from FTX. Because remember, FTX was not based in the U.S. They didn't say any of that. It was like everything they did was good. And meanwhile, we had the biggest collapse ever in finance during that administration. They didn't do anything to help anybody. It's really unfortunate, because instead of digging your heels in, like, let's reflect, right? Let's say, okay, we could have done this better. And that's why, as they said, everybody's ecstatic that he's no longer in the position. And so we are in a different world, but you can't get drunk on that. Can't get drunk on, we have a very pro-crypto SEC. It's like, yeah, but they're just not taking action against. They're not throwing money in. They're not printing money into crypto, right? So that's not going to necessarily change anything. A lot of the implementations that we're seeing in crypto, this is going to take years to kind of play out. I mean, MicroStrategy did a lot of moves really in the bear market and into the bull market. Now, MicroStrategy is sideways trading. And that brings us to the rest of crypto. Like I said earlier in the video, the exit queue on the Ethereum validator is very high. And this is a bearish indicator, right? Granted, some of this coin may be repurchased by the Ethereum treasury companies, but it's not. Because you can see it here in the entry queue. The entry queue is only 400,000 Ethereum, not 2.4 million Ethereum. We'll have to keep monitoring this, but this tells me this bearish signal. Another bearish signal, again, connected to the whole the FTX saga, and not just FTX, Celsius, Voyager, BlockFi. Brian Armstrong posted this saying, now you can lend your USDC and earn more, up to 10.8%. And so Coinbase is rolling out lending via USDC. They said there's a new way to earn from your assets, lend your USDC, and earn even higher rewards, all without leaving your trusted and easy to use Coinbase app. Lending is entirely powered by Morpho and Stakehouse Financial on Base, Coinbase's blockchain. We are rolling out this integration to Coinbase users over the coming weeks in the US, not including New York. Also, they're going to be including Bermuda and additional countries. But what does this give me signals of? Top of the market. This was from 2021. Top of the market. This was actually after the top of the market, by the way. Miami to distribute Bitcoin yield to residents. Has that ever actually happened? I don't know. I don't think so. We also have this. This was from October 2021, right around the same time in the cycle that we're in, right? Basically end of the cycle, right before the top of the market. Crypto lender Celsius Network raised $400 million as regulatory pressure grew. And so if you just forget about the regulatory pressure, they raised $400 million. And what was the main business of Celsius? Give us your crypto, we'll lend it out, you're going to be totally safe. Meanwhile, they were trading it on the back end. I'm not saying Coinbase is going to trade your crypto, but somebody is. That's why they're borrowing it. People don't borrow dollars to not go and effectively gamble it on something, right? Whether it's a business, whether it's an investment, whether it's trading, whatever it is. When you buy something, you buy it with the intent for the price to go up. I would say the only thing you actually buy that doesn't go up in value, like big purchases, is like a car. But most big purchases, you expect it to go up in value. And so this is what happened in the previous cycle. And we're literally seeing Coinbase doing the same thing. And I don't necessarily know that Coinbase is at risk, but the market is, because when there's extreme lending going on and they need to raise the rates to borrow, this indicates that people are drunk. They're doubling and tripling down. And when people are doubling and tripling down at all-time record highs, this is when me as an investor, as an analyst, I'm like, yeah, it's time to exit the markets. If you haven't already exited the markets. I mean, we have been ahead, right? And by the way, I want to make it very clear, we don't talk about my portfolio on this channel, right? Some cryptos and products we talk about on this channel, I have invested in or I have traded. Some I haven't. Some I've sold, some I'm still holding. Some I bought, some I didn't. And we don't talk about it because this channel is about analyzing the market, not sharing my portfolio, because it doesn't matter what my portfolio is. You should create your own investment thesis for your portfolio. And so what I've been laying out this year is that, like, we are heading towards the top of the market. So just the way that in a bear market, you dollar cost average in as low as we go, in a bull market, you want to dollar cost average out, no matter how high we go. Because if you sell, even at these prices, $115,000, $125,000 Bitcoin, and let's say we go to $250,000, you only missed out on a doubling. That's the upside, doubling. But the downside is 60 or 90% drop that you're not going to get back potentially ever. Or it's going to take multiple years. I mean, we've seen this with the Bitcoin treasury companies, the Ethereum treasury companies. Look at Nakamoto. If you invested in the company Nakamoto earlier in the year, it's down 90% in just a few months. From the top here in May to now, it's down 94% in the midst of a bull run. But people are going to say, but Cryptoviser, that's bullish. Buy it, buy it, buy it. It's like, no, learn the tokenomics. Learn why it's going down 90%. Because they're not actually bringing any value to the market. And these Bitcoin treasury companies are no longer exciting because you could just buy the Bitcoin directly yourself. You can buy a Bitcoin ETF. This idea that these Bitcoin treasury companies should trade at a premium to their NAV is complete financial gibberish. And all of them, within the next 1.5 years, will trade at a negative premium. 100% is going to happen. Bitcoin and Ethereum, 100%. And so the people who are telling you right now, no, we have to be at a 3M NAV, they are out of their freaking mind and they are going to lose. I don't know how they don't see it. Like, again, going back to the tweet at the beginning of the video, right? When your portfolio is hitting all-time high, the instinct is to celebrate. But the truth is, if you want to last as an investor, you need to train yourself to feel nothing. Don't get excited about it. Look at the market and say, whoa, whoa, whoa. Then we hear Coinbase saying this in December of 2023, right? 2 years ago. Coinbase has no plans to launch a Coinbase token. And now what are we hearing? The Base team is teasing the launch of a native token. So, I mean, guys, this is peak euphoria. This is euphoria. This is the euphoria stage. This is the banana zone, as Rob Powell calls it. They're going to tell you this is not it because they want to exit and they want you to keep buying. They're going to tell you, oh, no, the bull market is going till 2026. So you keep buying and buying and buying, and they're selling and selling and selling. We know they're selling. So why would you be buying? And by the way, a lot of the social media sentiment about buying the top, these could be bots. They could be bots to get you to buy so that you're the exit liquidity. You will be left holding the bag. This is so clear to me and probably many of you. Coinbase literally said, we are of no plans of launching a token. And now, literal 18 months after the Bitcoin halving, which I told you is historically the top of the market, in the euphoria phase, at all-time record highs, they're teasing launching a coin, even though they said they're not going to do it. And I'm not opposed to them launching a coin. I don't really care. But the timing is what you need to keep an eye on because they see there's liquidity to suck from retail, and they're going to take it. They are going to take it. So you need to be on the other side of that. And by the way, they're launching Coinbase Earn to earn 10%. And by the way, these were the same yields that Celsius, Voyager, 3 Hours Capital, they were all giving these 10% yields. And people were like, well, I'm going to buy this coin to get the yield because it's 11%, and this coin it's only 9%. So why would I want 9%? I want 11%. I'm like, unless you're dealing with like a large amount of money, it's really not that big of a difference. And is it worth losing everything for a 10% return? The answer is no. But again, they're drunk. They're drunk. They're like, no, we're going to have a Coinbase coin. Yay, yay. And I'm like, what? Didn't they just say they weren't going to have a coin? And I'm okay with them changing their thesis or their business strategy. I think that's actually a good thing. But they're doing it at the top of the market. And by the way, it's not just Coinbase. Consensus CEO Joe Lubin now says that MetaMask token is coming, and it may arrive sooner than you would expect. Let's listen in.
Will MetaMask have a token at some point, maybe in the near future?
The MASK token is coming. It may come sooner than you would expect right now. And it is significantly related to the decentralization of certain aspects of the MetaMask platform.
Okay. So MetaMask, which was never going to create their own coin, now they're creating their own coin. Just like JP Morgan thinks crypto is nonsense, but they have their own JPM coin. Top of the market. Meanwhile, Tom Lee says 95% of Bitcoin is mined, but 95% of the world doesn't own it. He sees the upside to $250,000 soon and as high as $3 million long term. Now, I'm not going to play the clip, but I mean, 250 is basically double where we're at. That can happen, but you guys have to keep in mind, the reason in euphoria phase you see this big jump and then an immediate drop is because this is just, it could be literally like, it could be one person selling Bitcoin and buying Bitcoin for $200,000. So one candle goes all the way up to 200,000 and then it immediately drops. And you guys also have to understand there is so much algorithmic trading out there where robots are literally just trading the market. So if the market moves up to 125, they're selling. They're triggering sell orders. It goes up to 150,000, it's triggering sell orders. It goes up to 160,000, it's triggering sell orders. So on the way up, you have all of these robots that are trading the market, and you have all these other products like the Bitcoin ETFs and stuff like that that are taking profits. I mean, we're seeing that happening. And so the tippy top of the market is not what you want to hit. You want to hit around the top or right after the top. Because right after that euphoric pump, then you have a little bit of sideways trading for a little bit before the drop. In my view, we are in this complacency stage. Look on the screen at the complacency phase right here, where I'm showing you at the top, right after the euphoric. And then let's look at the Bitcoin price, okay? I mean, in my view, we are like, what is the next catalyst that's going to push us to 200,000? I mean, MicroStrategy and all these other Bitcoin treasury companies have been buying billions over the last couple of years. So now we got to get to tens or hundreds of billions coming into Bitcoin, and people are expecting this to happen with the like 401ks or retirement funds and stuff like that. But I don't know that that's going to happen right away. And once they start to release these products in 401ks, which they already have, it's going to take years to get people to move their money into it. But a lot of people are just drunk on the euphoria. They are drunk on the euphoria in the market, right? And so we're seeing 95% drops. And I personally believe that what we're seeing with Kindly MD, with Cantor Equity Partners, which is going to be 21, which still hasn't become publicly traded yet. We're seeing the drops in the sideways trading after this big pump. This was the top. And if you look at the previous cycle in 2021, remember what I said. In around May of 2021, about a year after the halving, a little bit more than a year after the halving, in the last cycle, Vitalik Buterin was on some kind of podcast or something like that. And he said, I think the bubble already popped. And I told you guys, I was like, that doesn't make sense. Like, why would he be saying that now? And then when we looked back, he was right. Everything after that May timeframe in 2021 was just volatility. Granted, we went higher, but that's not the market you want to be holding through. That's the market you want to trade through. And so that's what happened in 2021. You can see that. Not necessarily as much in Bitcoin, but you can see it in Bitcoin, right? You see this pop up here into April of 2021, and then the drawdown. And in the drawdown, this is when, right around here, this is when Vitalik said the bubble already popped. And he was specifically, I think, talking about crypto in general, not necessarily Bitcoin, a lot of the altcoins. And then we had another pump up, and that was it. But a lot of people got in at this point during that drop after the bubble popped. Because you can see this run up from 2020 into 2021, this was a bigger move to the upside than the second pump. And so if we relate that to where we are today in 2025, you can see the major run up from 2023 into 2024. Then we had a major run up in 2024 into 2025, but this run up is less. You can see, right? It's less than we saw in 2021. Top, double top, a little bit of a correction, but then the people started buying here, saying this is the bottom. This wasn't the bottom. And this was at the beginning of the year. And now we moved up. And I think this is the final leg up in the cycle. And so I don't know what you guys think. Like, what are your opinions on this? But in my view, the risk factor of us going down versus higher, or the ratio, I should say, I think is about 70-30, meaning there's a 70% chance we go lower, generally speaking, and about a 30% chance that we go higher. And even the thing is, even if we do have that higher, how much higher are we going to go, and is it going to be sustained? Because the higher we go, the more selling there will be. Not buying, because the buying has been going on over the last couple of years, as you can see from the chart. And so with that, let me know what you guys are doing in your portfolio, and let me know what you think about this Danny Marquis investing informant tweet about not getting drunk on the euphoria in the market. Because a lot of people, they're like, well, Cryptoviser, I don't see the euphoria. It's like, well, when did you buy? I bought at $100,000 Bitcoin. It's like, well, you're not going to see the euphoria until the next cycle for your buy price. And how do I know this? Just look at Kindly MD. Nakamoto, 95% drop in just the last few months since the peak of the market. And so everything else after that is just volatility. It's just people trying to hold up the market. And by the way, in a bear market, you don't have to convince people to be bullish. But now, at the end stages of the bull market, you hear people saying, but Cryptoviser, MicroStrategy is doing this, MicroStrategy is doing this. Of course this is bullish. He's going to do this, he's going to do this, he's going to do this. It's like, no, guys, you're trying to convince me to be bullish. In a real bull market, you don't have to convince me to be bullish. And I'm not saying we're not in a bull market, but I think that we're at the end stages. And so there's going to be very limited time left to take those profits out. And by the way, even if you don't agree with my timeline, that the top has already been hit, and you're saying, well, last cycle, we went, the all-time high was in November. Well, I'm basically recording this less than 6 weeks until November. So effectively, if that is your thesis, you have about a month to get out. And if other people are front-running that, you have less time. Let me know what you guys think. Don't forget to give the video a free thumbs up. Hit that subscribe button. Let me know your comments down below, and check out my other videos. We upload every single day completely for free. You can also become a channel member by clicking the join or subscribe plus button down below, or you can leave a super chat in the comments. Thanks to everybody who does. See you guys in the next video. Crypto on.